You work hard. You earn your money, so why give more of it away than you have to? In this episode, we're diving deep into how to legally pay less in taxes using strategies that are 100% IRS approved, commonly used by the wealthy, and available to regular people like you. This is about keeping more money in your pocket, growing your wealth faster, and doing it the smart way. And hey, if you want more money smart content like this, hit that subscribe button, like this video, and share it with someone who needs a financial glow up. Part 1. Why tax strategy is wealth strategy. Let's start here. Rich people don't get rich just by earning more. They stay rich by paying less in taxes. Legally, the difference between someone who makes $100,000 and someone who keeps $100,000 is massive. You don't need a secret loophole. You need strategy. Part 2. Understand your tax bracket and why it matters. In most countries, especially the US, UK, Canada, South Africa, Australia, income taxes are progressive. That means you pay more as you earn more. But not all your income is taxed at that top rate. So the first step is knowing your bracket. Why? Because certain tax saving strategies make more sense depending on your income level. Part 3. Max out. Tax advantaged accounts. This is one of the easiest legal ways to pay less tax. In the US, this includes 401k or 403b pre-tax retirement accounts. Traditional IRA lowers your taxable income. HSA, health savings account, triple tax benefits. Other countries have equivalents. UK, ISA, and pension contributions. Canada, RRSP, TFSA, Australia, superannuation. South Africa, retirement annuities, RA. Each contribution reduces your taxable income, meaning you pay less in taxes now and grow your money tax deferred. Part 4. Turn deductions into your superpower. Deductions are your best friend. Common deductions include mortgage interest, charitable donations, student loan interest, business expenses, health insurance premiums for the self-employed, home office costs, education and childcare credits. Action step. Keep a spreadsheet or use an app to track every deductible expense all year long. It adds up and can shift you into a lower tax bracket. Part 5. Start a side hustle, even a tiny one. Here's a game changer. A side hustle opens the door to more deductions. Once you register a business or even operate as a sole proprietor, you can deduct office supplies, equipment, marketing costs, internet and phone, part of your home expenses, travel, meals, mileage. Even if your business doesn't make a profit in the first year, you can use that loss to offset your taxable income from a job. Totally legal. Totally smart. Part 6. Use depreciation to lower your taxable income. This one's underrated. If you own real estate, equipment, or even a business vehicle, you can depreciate the asset over time, meaning you get to write off part of its cost every year, reducing your taxable profit. Real estate investors especially use this to show a loss on paper, even when they're making real money in cash flow. Part 7. Own instead of rent. In many countries, owning your home equals tax advantages. You might deduct mortgage interest, property taxes, private mortgage insurance, PMI, home office expenses. If you eventually sell your home and it's your primary residence, you could also avoid taxes on the gains up to a certain amount. Owning builds equity and can save on taxes. Part 8. Shift income to family, the legal way. This is for entrepreneurs and freelancers. You can pay your spouse or children for actual work, filming, editing, admin, social media, and reduce your personal taxable income. In some countries, there are rules around how much and for what type of work, but it's legal. The benefit? You lower your own tax bill. They may pay lower taxes at their bracket. Always document and file properly. But yes, even paying your 13-year-old to manage your TikTok can save you money. Part 9. Use tax loss harvesting for investments. If you invest in stocks or ETFs and you sell some at a loss, you can offset those losses against your gains. This is called tax loss harvesting. Pro investors use this every year. Sell losers, lock in the loss, and buy a similar asset to stay in the market. You can even carry forward unused losses to future years. This strategy alone can save thousands in capital gains taxes. Part 10. Move strategically. Some countries and even US states have lower tax rates or none at all. If you work remotely, moving from a high tax state like California or New York to a tax-free state like Florida or Texas could increase your take-home income by 5 to 13% instantly. Outside the US, some countries offer tax-free or low-tax residency to digital nomads or expats like UAE, Georgia, or parts of Southeast Asia. Lifestyle plus tax wins equals smarter money. Part 11. File smart. Don't rush, don't delay. Don't file late, you'll get fined. But don't rush either, especially if you need to. Organize deductions. Wait for missing forms. Max out retirement contributions. Use a CPA tax software or at least double check your numbers. Missing even one deduction can cost you hundreds or thousands. Part 12. Hire a good tax pro. It pays for itself. Hiring a tax expert is not just for rich people. A good tax pro knows how to apply deductions correctly, helps structure your income better, keeps you audit proof, saves you money even after their fee. If you're self-employed, side hustling, or investing, get a tax advisor. It's one of the best financial decisions you'll ever make. Final words. Taxes aren't evil, but paying more than you need to? That's just bad math. By using smart legal strategies, you can lower your taxable income, keep more of what you earn, grow your wealth faster, and protect yourself from audits. If you found value in this, smash that like button. Subscribe to Big Money Booster for weekly content on personal finance, tax tips, and building real wealth. Share this video with anyone who thinks taxes are just a burden, not a strategy. Comment below, what's one tax tip you wish you learned 5 years ago? Thanks for tuning in to Big Money Booster, where smart money moves turn into big money wins.